Dollars in assets under management. Our guide on this Friday is Franklin Templeton Chief Market Strategist Stephen Dover. Stephen, you know, the majors are on pace for the first back-to-back weekly gains this year. Could the answer simply be don't do anything if you want to win in this market?
Probably at the current moment, because we think that the possibility of a positive outcome in Iran is priced into the market. Interesting, you just mentioned the VIX. So our signal has been when the VIX hits 30, that's a time to certainly step in and dollar cost average. If the VIX hits 50, which it hasn't, but that would be an absolute jump in buy signal. But the VIX hit close to 30, and that was the bottom, at least for now. And we've seen a recovery since then.
Yeah, let's talk about that. If we stretch out the picture, and we can see when it hit 30, it was during, of course, the most tense part of this this face-off between Iran and the United States. It's interesting that you've given exact points here. You say when it gets to 30, and for those of you who don't understand, dollar cost averaging, you take the same amount every month, no matter what the market's doing, and on the same day every month, you buy. And then you say, if it's 50, just dive in. It doesn't look like we're there anywhere close. We're at 19.
No, nowhere close. Given what we're looking at now, if over the weekend things fall apart, I wouldn't be surprised if volatility increases pretty significantly. We're in that situation where that old adage, the economy is not the market, is kind of applying. I think if you'd look dispassionately about all things going on right now, you'd think the market would be a lot lower. But what's driving the market right now is all these tailwinds, and earnings are holding up. And we expect that to continue. So despite all of this noise, we still think that there's an overall positive outlook on the market between now and the end of the year.
And if you were to dig down, or shall I say drill down, you do like energy, but you see exactly how high the price has gone, and that, of course, would be a buy signal for people looking in that equity space, in the oil patch. But we got these CPI numbers. I mean, all energy was up 10.9% month over month. Look at gasoline, up 21%, fuel oil up 30%, motor fuel up 21%. So again, it's a hard area to try and pinpoint directly. Now, President Trump did this afternoon put out on Truth Social, we can put this up, he said, Iranians do not seem to realize that they have no cards except other than a short-term extortion of the world by using international waterways. That would be the Strait of Hormuz. In the meantime, U.S. drillers, they cut oil and gas rigs for the third time in 4 weeks, so the supply continues to go down, prices continue to go up. Is that what's behind your thesis of buying energy?
Well, we're talking about a complete restructuring of energy. I don't think we're going back to where we were before in a dependency on the Strait. Unfortunately, Iran really does have a card because the Strait's not open. We don't see oil prices dropping. We see them in that $90 to $100 range for a while. We'll see how this turns out, but that is the card that they are playing. I'm very happy that Trump did say that's a demand, that they have to open up the Strait. So we'll see how that works out. But even if they do, it's going to take a while for oil to actually flow. And I wouldn't expect prices to go back to where they were. But certainly, we know that now that it doesn't take much to close the Strait. So around the world, countries and businesses are going to have to restructure their supply chains to be less dependent on the Strait as they were in the past.
Well, yes, we would hope everybody learns from this situation, and we can't be living like this where, even though the U.S. is very energy independent, it still affects our prices, as we have seen. Let me talk about technology, because
prices are global.
Yeah,
yes.
Very true. You talk about tech as being a core allocation. Today, tech is the best performer, but not all tech. I mean, semiconductors are doing beautifully at the moment, but the software names once again getting absolutely crushed. So how do you maneuver between these moving targets that are very difficult to hit right on the nose?
Right. So just to be very clear, our general point is to invest broadly and not be way overweight tech. But yes, we like tech, And we definitely view the AI story as moving much faster than anyone anticipated. Mythos is, wow, an example of that. So scary. The government, is very concerned about the power that it has. We think that the next move, or the move we're in right now, or have been, is the build it phase, if you will. And if we're looking at to where the opportunities are in the next year or so, it's going to be the implemented stage. So software, which you talked about, software in general is being disrupted because AI can replace the software engineers that build the software. But the businesses that software in, I don't think these AI companies want to be in that business, have all the sales forces that go out there and meet the customers and everything else. What we're looking at, and this is across the spectrum of stocks, is what companies are implementing AI, going to increase productivity and really be the differentiator over the course of the next couple of years. And that's a really company by company decision, tough to do. You've got to have CEOs that are dedicated to implementing AI.
It's funny you brought up Salesforce. If you look at the winner on the Dow, it's NVIDIA. As we said, chips doing incredibly well. Look at the heat map here. From NVIDIA, you make a cross all the way down to the left, to the right at the bottom, and Salesforce, which of course is a software name, is the one that is getting hammered here, down 3.5%, along with a lot of the other names. We're going to talk about so much more of that with the BlackBerry CEO coming up. Stephen, lovely to see you on this Friday. Thank you so much for your calm words. We appreciate it. Thank you so much.